Whether Santa Claus is coming to Wall Street remains to be seen, but you could still snowball your money with the strategy I'm using to plow our way ahead through rallies or storms. The next major profit rotation is about to begin. You don't want to miss it. You can collect hundreds, even thousands, almost passively, while exponentially growing your wealth. How, you ask? You'll be stunned by how simple this is. Click the button below now, and I'll show you exactly how to do it. My Christmas expenses are totally covered, all thanks to this strategy. Are you ready to join me? Click below now. Do it now. Hey gang, the holidays are here, and it can bring good fortunes to your trading account. Today, we're talking about the phenomena known as the Santa Claus rally. It's an effect that happens around the end of the year when stocks tend to rise and create a healthier market for the first quarter next year. Will we see a Santa Claus rally this year? And what does it mean for your trading? Let's talk about it in today's video. All right, folks, today we're going to talk about Christmas rallies, Santa Claus rallies. Basically, the question is, are we or should we expect a rally towards the end of December? Now, it's a really good topic and it's a really interesting topic. And let me tell you what I've figured out over the years. 90% of these end-of-year rallies are caused by a very strong retail sector. Believe it or not, retail sales make up about 70 to 80% of the gross domestic product. That's right. Our economy, as you know it, American economy, 75 to 80% of economy is consumer sales. I know it's shocking, but it is what it is. So typically what we see is we see retail companies begin to rally in early to mid-December. And when we see that, that usually causes better than expected earnings on the retail companies or better than expected retail sales. And that's what causes the stocks to go up. So it took me many years to figure this out, actually, because I had to do some testing. So what I started doing was I started looking at retail stocks, individual retail stocks, to see whether their relative strength increases as we get closer towards the end of the year. And when it does, we tend to have an end of the year rally. Now, unfortunately, I've only been able to test about 50 years. And I'd like to test sometimes up to about thousands and thousands of periods, but I can't do that here, so we're limited in tests. But it fundamentally makes sense because if gross domestic product is strong, if the GDP is strong, and if numbers are expected to go higher, and the retail numbers are influencing that, that means our economy is heating up. And investment funds and pension funds, they sometimes wait till the end of the year to put money back into the stock market. So what you're seeing is a strong influx of institutional capital hitting the stock market at the end of the year. Well, now you understand what that's all about and what causes these rallies. So the question is, will we have one this year in light of the trade war, China, impeachment proceedings? There's a lot of stuff happening on the table. So here's what I'm going to tell you right now. Employment numbers or unemployment numbers are at a 50-year low. Interest rates are near historic lows. Our economy is humming along. And stocks are near 52-week highs. Now, China may cause some impact, but the truth of the matter is China is just a very, very small segment of the large cap segment of the economy. Now, when you're talking about Russell 2000 or stocks that stocks that have a market cap of less than $2 billion, there's a lot more China in those stocks. But when you're talking about a conglomerate like Best Buys or Target, China's not that big of a factor. And let me tell you what I'm finding right now. Right now, as I'm looking, I have a relative strength chart that takes into account a scan, not a chart, a scan. And it takes into account 30-day, 60-day, 90-day rise in price. And right now, Tiffany, which is being taken over by Louis Vuitton, that's a very positive sign at the end of the year. Target, CVS, and Best Buy. All these are four giant retailers. They are right now increasing their relative strength tremendously. So if I continue to see this happen, there's a really strong possibility we're going to get a Santa Claus rally. As it stands right now, it looks like we're going to get one. We may have a little shakeout. Now, we're only in the beginning part of December, so there's a really good chance we may end up seeing one towards the end of the month, maybe the last 10 days of the month, especially if China and U.S. resolve their differences and agree on the phase one of the trade war, and that happens on the 15th of the month. So if that gets resolved, and if we continue seeing relative strength support the retail sector, keep your eye on the retail sector, there's a really good chance, about 65% chance, maybe even close to 70, that we are going to see an end-of-year rally. Analyst opinions are all over the place this year, folks. Are we going to have a Santa Claus rally? Well, some say we could see one for the record books. Others think issues like trade war tension could block further gains. Let me tell you how I think this will play out. Then click the button below and I'll show you exactly how we'll use it to our advantage.